The economic landscape is shifting beneath our feet, driven by an artificial intelligence revolution with one company, Nvidia, at its very core. This technology titan recently reclaimed its title as the world's most valuable public company, achieving a staggering market capitalization of approximately $3.8 trillion, surpassing Microsoft. Its stock has seen a remarkable surge of over 60% since its low point in early April, overcoming various concerns and demonstrating sustained momentum. This isn't just about market value. It underscores Nvidia's absolutely pivotal role at the heart of the AI revolution, a transformation that is profoundly reshaping industries across the globe. Nvidia's unprecedented ascendancy is deeply rooted in its commanding presence within the specialized chip market that is indispensable for artificial intelligence. The company effectively controls the ecosystem that developers, enterprises, and even governments rely on, holding an estimated 90 to 95% share of the AI graphics processing unit or GPU market. Their flagship GPUs, such as the Hopper H100 and the next generation Blackwell chips, are in extremely high demand, with individual units commanding prices exceeding $40,000. But Nvidia's influence extends far beyond just selling hardware. The company provides critical networking tools like NVLink and robust software platforms such as CUDA and NeMo, which are actively utilized by tens of millions of developers worldwide. This comprehensive end-to-end solution creates a powerful and sticky lock-in effect, making it exceptionally difficult for customers to transition to alternative providers once they've integrated into Nvidia's powerful ecosystem. The company's commitment to relentless innovation further cements its unassailable market position. Nvidia has outlined an aggressive strategy to release a new, more advanced chip every single year, with Blackwell Ultra slated for 2025 and the revolutionary Vera Rubin generation following in 2026. This consistent rollout, with plans already extending to 2028, ensures that Nvidia remains squarely at the technological forefront. Beyond its core chip business, Nvidia is strategically expanding its focus into other high-growth areas, including robotics and quantum computing. CEO Jensen Huang has publicly identified AI and robotics as multi-trillion-dollar growth opportunities for the company, highlighting initiatives such as the Nvidia Drive platform for autonomous vehicles and critical partnerships for developing advanced humanoid robots. The company recently announced ambitious plans to establish a quantum computing research center in Boston, aiming to seamlessly integrate quantum hardware with its powerful AI supercomputers. Nvidia's financial performance provides a vivid illustration of its market dominance. In the first quarter of fiscal 2026, the company reported a staggering 69% increase in revenue year over year, with its absolutely critical data center segment soaring by an astounding 73%. Adjusted net income for fiscal 2025 skyrocketed from $8.4 billion to an incredible $74.3 billion, showcasing truly exceptional profitability. Despite the high costs typically associated with rolling out new architecture, Nvidia has impressively managed to maintain gross margins consistently in the 70% range. A significant portion of Nvidia's revenue, precisely 40%, originates from major tech giants like Microsoft, Meta, Google owner Alphabet, and Amazon, all of whom are investing billions into their AI infrastructure. This intense demand is not confined to the United States. Governments in Saudi Arabia, the UAE, Taiwan, and the European Union are actively partnering with Nvidia to build their own sovereign AI capabilities. The company has also forged strategic alliances, such as a recent partnership with Novo Nordisk to develop highly customized AI models, and its GPUs are integral to nearly 100 AI factories currently under construction globally, a number that has doubled in just the past year. In an unexpected turn, Nvidia's investment arm also recorded a significant $4 billion profit through its largest holding in the AI data center infrastructure company, CoreWeave. Despite this formidable and sustained growth, Nvidia has adeptly navigated several notable challenges. Export restrictions to China, for instance, have significantly impacted its revenue, leading to a substantial $4.5 billion inventory charge and an estimated $8 billion hit to second quarter revenue. China previously accounted for over 13% of Nvidia's total revenue. CEO Jensen Huang himself has suggested that these controls have inadvertently spurred Chinese tech companies to accelerate their own AI development, a point he has underscored as making the export controls a failure in their stated aim. Furthermore, broader market shifts and escalating concerns over tariffs or international conflicts have, at times, led investors to adopt more defensive positions, causing Nvidia shares to retreat. We saw this with an over 40% drop from its early year peak to its April lows following former President Donald Trump's Liberation Day tariffs. Competition remains a persistent factor in this dynamic market, with new entrants such as AMD's Instinct MI300X chips and Intel's Gaudi 3 AI chips actively vying for market share. However, no competitor has yet managed to successfully replicate Nvidia's truly comprehensive end-to-end solution that seamlessly integrates chips, networking, and software at the same advanced level. AMD's MI300A series, for example, has been noted for lagging in energy efficiency compared to Nvidia's offerings, and Intel's contributions largely remain niche, clearly demonstrating that a hardware-only focus falls significantly short of replicating Nvidia's deeply integrated stack. Concerns have also been raised regarding Nvidia's investment in CoreWeave, particularly concerning the potential for rapid depreciation of CoreWeave's Hopper GPUs due to Nvidia's relentlessly aggressive innovation cycles. There are also questions about CoreWeave's reliance on debt and its high valuation. On a technical note, many analysts acknowledge that Nvidia is currently officially overbought, with its relative strength index, or RSI, approaching 74, which often indicates the potential for short-term profit-taking. From a valuation perspective, despite its impressively high stock price, Nvidia's forward price-to-earnings ratio sits in the range of 25 to 34 times projected earnings. This is notably lower than its 5-year highs, which exceeded 100 times, and its 5-year median, which hovered around 50 times. This suggests that its extraordinary growth rates have effectively kept its valuation remarkably in check. Wall Street analysts are overwhelmingly bullish, with firms like Loop Capital recently hiking their price target to $250, predicting a golden wave of generative AI adoption where Nvidia is unequivocally set to lead. Analysts project impressive 42% earnings per share growth and 51% higher sales for the current fiscal year. The broader AI market is still very much in its nascent stages, with projections suggesting it could add over $15 trillion to the global economy by the end of this decade. Nvidia is uniquely positioned at the absolute epicenter of this monumental growth, acting as the absolute choke point for AI infrastructure, akin to laying the track for a transcontinental railroad. While a single $10,000 investment in Nvidia today is unlikely to independently turn an investor into a millionaire, given the company's current immense size and the reduced likelihood of replicating its earlier meteoric gains, its continued dominance and pivotal role in the artificial intelligence sector make it an incredibly compelling component for any long-term growth portfolio seeking to capitalize on this profound technological revolution. That's all for today's market analysis. If you found this information valuable, make sure to hit that like button, subscribe to the channel, and turn on notifications so you don't miss our next video. We're constantly bringing you the latest insights to help you navigate these dynamic markets. Thanks for tuning in, and I'll see you next time.